Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Tesla has emerged to be the leader in electric vehicles, first mover, big advantage so far. We're seeing the rest of the automaker market try to catch up, whether it's other upstarts or the legacy automakers trying to make their move too. I'm Jason Hall. This is The Smattering, and I got Tyler Crow here with me. We're not going to talk about electric cars. We're going to move up the food chain, and we're going to take a look at medium and heavy duty vehicles because there's a lot of interest in the Tesla Semi. There's a company out there that's taken the other side of the Tesla name, and that's NKLA, the company that's working on trucking and hydrogen. Are the legacy companies sleeping on this? Are investors really missing the opportunity with those legacy companies? Hey, Tyler, how's it going?
I want to draw a big difference between the passenger vehicle market and the truck market because they're hugely different markets. But from the EV part of it, Tesla jumped in before everyone else with electric vehicles, and they did get a head start. The Model S, the Model X, and there was a lot of momentum that the company was able to build before anyone in the legacy auto business really could get their feet underneath them. Now, it has changed since I would probably say the past 2 years, the legacies have really come in and started to build out. This is not the same case as it is in the heavy duty truck market. These startup companies that we talk about, like you said, Nikola, Tesla with its semis, they don't have this multi-year head start over the existing competition. These companies that maybe you haven't heard of them unless you are in the trucking business, but Paccar, Navistar, which is owned by Volkswagen, Mack, which is owned by Volvo Trucks, Freightliner is owned by Daimler. All of these companies right now either have existing models on the road for medium range and drayage, which is moving things around the port. They have offerings like that either for sale right now or they're taking orders for them right now. This was not the case that we saw in the passenger vehicle market. And because of that, I think a lot of people that have gravitated to the new startup companies to tackle this industry, thinking it would have the same story as the passenger vehicle market. I don't think that's the same thing. And I really think if you're really interested in this, you should go look at the legacies because they're doing some very interesting things.
Yeah, I want to take a minute and talk about Paccar because if you think about the industry broadly, as an investor, as a stock picker, this is one we can find with a stock and a wonderful business behind it that has generated wonderful returns for investors over the long term. If you look at the past 5 years, it's outperformed the market. They have a pretty long history of paying a good dividend, pretty good record of growing that dividend when it was appropriate. And again, with Paccar, you have two of the industry leading brands in North America in Peterbilt and Kenworth, right? And then if you look in Europe, you have the DAF brand, which is it's number one or two in market share, depending on the country that you're in. So substantial market share in all of Europe and North America, and generated great economic returns for investors. So we start there, right? I think that's, Tyler, really important to me if we start talking about the story of looking at the trucking industry versus automotive industry. On previous videos, you can go back and look through our channel and see other videos we've done about Ford and some of these other companies and General Motors, and the reality is that for the most part, Tyler, automakers we haven't seen in our lifetimes anyway, we haven't seen any market-beating companies to hold. And Paccar has been a market-beating company to own. So I think that's important as a starting point. You make the investment idea harder if you're already swimming against a current. And I think in the automotive industry, you really are. With Paccar, this is a company with wonderful market share, wonderful economic returns.
It's not just wonderful market share. It is a very consolidated industry. Like we just mentioned, between those companies you mentioned and what I said with Daimler, Volkswagen, and Volvo, those four companies with their various brands take up 95% of the Class 8, which is the semi-trailer truck that you see on the highway. They take up 95% of the market share, just four companies. And so because of that, you're not running into the 15 different competitors always at a knife fight for price and having all of the oversupply, undersupply that you can typically get when you have that many players in something like a passenger auto market.
Let's talk a little bit about the differences too between the buyers of those markets, because I think that's a major differentiator. The auto industry, these are largely an emotional buy, right? Or a purely financial decision where you're buying the least expensive thing that'll meet your needs as you can, or you're buying a car because there's something emotional attached to it, right? It's a status symbol, it's fun. You're buying an EV because it strikes some of those chords about it's a good thing for the environment to do. And even though it's vastly more expensive, you're willing to make that emotional decision. But if you're Coca-Cola and you're operating your logistics fleet, or your Walmart or Home Depot, or you're one of the shippers, UPS, FedEx, some of these other companies, these are financial decisions, first of all. So you think about it from a cost perspective. What is the return on the investment? What is the total cost for the ownership? If you're buying a Class 8 truck, you're also fueling it, you're maintaining it, you're training your drivers. All of those aspects come into play. What is the revenue that it's generating, right? What is the return you're getting? So you can't make just a purely emotional, oh, it's good for the environment, so that's worth 30% more. You're going to say, what tax credits am I going to also be getting, the carbon credits to offset that cost? Okay, we're moving from diesel to natural gas, or we're moving from diesel to electricity. How much am I going to be saving on diesel fuel now versus how much am I going to be paying for electricity? Time is money. How long is it going to cost me to charge this vehicle at a time that I would typically be operating it? So now I'm taking it out of operation to refuel it, right? All of those things come into play that frankly you don't think about as much in the same ways when you're making a personal decision as an individual consumer. And again, I think part of that again ties back into the story. You talked about this consolidation of the industry. One of the reasons this consolidation has happened is you have these big buyers that make up a large percentage of the buyers in the trucks market. And in a lot of ways, they're also partners with these manufacturers, because I can tell you, if Kenworth or Peterbilt are working on a design, part of it is because of conversations they're having with their users and what they're looking for and what they need. And you know who the first one that's going to get those vehicles before they're even commercial are? Those big buyers. They're going to be testing them in their fleets to find out what's working, what's not, what do we need to improve on before we bring it to market. I think that's a big differentiator. And it's one of the reasons that it's even going to be harder, Tyler, I think, for the Teslas of the world and the Nikolas of the world to really necessarily break off big chunks of this market, because the companies that are successful now are already working with those partners to develop the things that they're saying that they're going to want.
Yeah, and before we got on the call here, we discussed, is there a possibility? And the one thing that we know is that for all the things we just talked about, long range trucking, the 500, 600, 700 plus mile sort of routes that we're talking about here, is a market that hasn't quite been cracked by these particular companies. You look at most of their offerings and they're still on the lower mileage lane. So there is a market for what Tesla Semi says it can do, what Nikola says its hydrogen truck will be able to do. If they can figure that out and actually have something that is 500 miles or more, there's a chance. But if you're going to try to fight them on these lower range 250 to or less sort of mileage, I don't know if that's a market they're really going to be able to compete with, considering what they're up against in this industry.
I'm going to agree with you right there. And I want to just point out specifically, Nikola says that its Tre fuel cell vehicle, this is the hydrogen fuel cell vehicle. They're saying it's going to be available in the second half of this year. So it's going to be really interesting to see if it's able to bring those to market, because that is the drivetrain that gives you essentially everything that's made diesel attractive. Plenty of torque, plenty of range, and if you refuel within minutes instead of hours, and you're back on the road running again. So of course the question there is getting hydrogen fuel stations available in the areas that they need to be. But this is a hyper conservative industry about adopting new technologies and making those changes. And all of these upstarts have a big uphill fight to try to take market share and to disrupt these existing players that, like you said, they're already doing tons of innovation themselves.